Guys, so the next stock that we're breaking down for this morning is Naked, or ticker symbol NAKD. I have my lines and graphs already set. We're starting from a higher time frame, that being the daily interval. This allows us to find the overall direction and trend that our stock is in. I haven't broken down Naked or ZOM in a minute, so I figured I would do an update for you guys, okay? So this top line represents our major resistance line. You can see we got rejected over here, and over here, and over here. On the opposite side, working as support, you can see we kind of bounced over here and a little bit over here, and then down here is our major support line. Down here you can see we had resistance back here and over here, more in the future area of where we're at. We zoom in, you can see that we're now just kind of riding underneath this resistance, you guys. Every time we come up into this area, we're getting rejected. We can see we had a little bit of a peekaboo over here and then ultimately pulled back under. So technically, as of right now, we are still below the trend line. We are still in this downward trend. Yesterday we closed down almost 3%, and this morning we're down almost 3% again. Okay, let me look at the volume real quick. So the volume is at 665,000, so it's above that 150,000 that we like to see. So it does have volume. However, if you look where we're at, you guys, we're actually under this resistance. So if we want to have a clear direction on a reversal, the first thing that we would want to see is this to create a breakout and break above the 57-cent area, which is this resistance, for us to come up and come back down and retest it as a support, create that higher low that we like to see, and basically break above the trend line. And from there, then that could be a great ideal entry. Have your stop loss back underneath the 57-cent area, maybe have it at the 51-cent area, or the 53-cent area could be a good stop loss. And but like I said, first thing that we need to do is break it past this 57-cent area and come back down and retest that. Okay, so that doesn't mean it's going to happen today. We just want to add it to our favorites list and keep a close eye on it. Maybe set an alert for this area if we can break past this level. However, more than likely, if we do come back up in this area again, we may get rejected and continue this downward trend. So this is why we don't want to get in just yet, because we want to make sure that we are in this the start of a reversal. But as of right now, I don't see that, you guys. Every time we come up into this area, we are getting rejected. We can break down to the 1 hour chart and have a more accurate look. You can see back here, we really try to create this breakout, which we ultimately did. We created this breakout, started this upward trend, and then out of nowhere, we gapped back down underneath this resistance, okay? And then you can see that we're in this clear, slow-moving downward trend, okay? So I will do an updated video if we start breaking past these lower lows, which is at the 47-cent area, and then from there, I will create a video on where we could be heading next for our next level of support. But as of right now, like I said, getting in would not be the smartest decision, because we are in this clear downward trend. We have resistance right above us, and other than that, there's no clear sign of a reversal yet. So the first thing that we want to see, like I said before, is that we break past the 57-cent level, and then from there, we can watch a close eye on this and see if we can start that reversal, okay? But as for right now, you guys, let's be patient and let's wait for the best opportunity and ideal entry, okay? So I like to make these videos really fast and efficiently, and if I did that for you guys, please hit that like and subscribe button. Every single one of you that does this, it helps, you guys. Every single one of you, it helps. So please do that for me. But other than that, I hope you guys have a beautiful day and happy trading.